Hello traders and welcome back to the Forex Geek. In today's video we'll explore the bullish spinning top candlestick pattern, which is a crucial tool for identifying potential market reversals. So understanding this pattern can significantly enhance your trading strategy and decision making process. So by the end of this video you will have a clear grasp of how to recognize this pattern, its implications for market psychology, and effective trading strategies to apply it. So stay tuned until the end to learn how to leverage this powerful candlestick formation in your trading arsenal. So without wasting much of your time, let's get started. First we'll start with the pattern breakdown, where I'll show you how the pattern forms and its key characteristics and also its market psychology. So the bullish spinning top candlestick pattern is a significant indicator in technical analysis, often signaling potential trend reversal. So to effectively use this pattern in your trading, it's essential to understand its characteristics and implications. So it has specific characteristics that make it easy to identify. So the first characteristic is that the pattern consists of a small real body, which indicates that the opening and closing prices are close together, as you can see here. And the body is typically higher than the previous candle's body, showing that buyers have gained some control. And it features longer upper and lower wicks or shadows, which represent significant price movements during the trading session. So the market psychology behind this candlestick pattern, this bullish spinning top candlestick pattern, is that it forms during periods of indecision in the market. It signals that both buyers and sellers are active, but buyers are starting to gain the upper hand. This pattern usually appears at the bottom of a downtrend, indicating a potential reversal. So it's wise you always look for this pattern at the bottom of downtrends or at trend line bounces or at support levels. So it's the signal that market might shift its market sentiment from bearish to bullish. So let's talk about the trading strategy. How can you use this to trade? When you spot it, what do you do next? But first, before we do that, let us hop on the charts and spot them on real market conditions. As you can see, this green candle, this bullish candle at the bottom of this pullback is a bullish spinning top candle. So let's look at the general market context before we go to this. You can see that we are bullish, have this bullish order flow in the market, and so we expect that when price retests this trend line, we should see a bounce, have this like a channel. So as price got to the bottom of this trend, as price got to the trend line, the lower trend line, you can see this bullish spinning top candlestick pattern right there. And when you spot it like this, the ideal entry strategy is to wait for a confirmation candle after the bullish spinning top, and this candle should close higher than the spinning top to confirm the bullish sentiment. So it is also important to identify the pattern at key support levels. This adds strength to the signal as it indicates that buyers are stepping in at significant price points. Also, the last entry strategy is to check for volume. The volume should be above average when the pattern forms, as this suggests strong interest from buyers. So as you can see, this is in line with this support level. Also it's in line with the general trend line support, this dynamic support level. So this is a wise one. Now let's also look for the volume. You can see at the same time this happened, we have this bullish volume also, and also you can see minor increase in the volume right there. So with this, it's enough confirmation that we should look to enter from here. So you could just place your buy after the breakout of the high of that bullish spinning top candlestick pattern. and your stop loss should be below it, in this case below the trend line, and your take profit could be at the high or this swing high right here or resistance. That was how we are able to catch this trade with the bullish spinning top candlestick pattern. So I want to look for another example. Let's see if I can spot another example. Okay, I have one marked here. We're in this bearish trend, and it's expected that once price gets to this trend line, we should expect a bounce and push to the upside. And you can see as we got to this level, I have the bullish spinning top candlestick pattern right here, and we have price closing above the high of that candlestick pattern, and that should signal an entry. But before that, let us check our volume. You can see enough buying volume around, much of buying volumes around the time we had this bullish spinning top candlestick pattern. So that is an indication that we should be looking for an entry, and if you enter here, your stop loss should be below the bullish spinning top candlestick pattern or below the trend line in this case, and your take profit should be at significant resistance levels like this or this one here, or you could just choose to do a 1:1 or a 1:2 risk to reward ratio depending on your preferences. So it's essential you place your stop loss orders always, as this protects you in case the market moves against your position. So here's another opportunity. In this same trend, we had this formation around this support, the trend line support, and you can see this bullish spinning top candlestick pattern right there, and it's expected that price should start going up. We should start expecting bullish movements from this area. Also check the volume around this area, and you can see, if you zoom into that, you can see this volume, have this rising volume right there, and it's expected that we should be looking for buying opportunities around this area. So if you are a conservative trader, you may be looking for the break of this resistance before your entry, or if you are an aggressive trader, you just enter at the break of the high of this bullish spinning top candlestick pattern and close above the high, and just place your buy entry here and your stop loss below the low of the bullish spinning top candle, and in this case we'll be using below the trend line, and take profits should be at significant resistance levels like this, or you could use a 1:1 or a 1:2 depending on your preference. And that was how we were able to catch that buy trade using the bullish spinning top candlestick pattern. Advanced trading strategies includes combining the bullish spinning top with other technical indicators like the moving averages or RSI to strengthen your entry signals and confirm trades. So also use Fibonacci levels alongside this pattern to identify potential reversal points, and also set more precise targets. For example, for this trade, if you use the Fibonacci from this swing low to the swing high, see that this aligns with this 1.8% Fibonacci level as a significant support level. So there was enough confirmation for this trade actually. So the last advanced trading strategy for using the bullish spinning top is to combine the candlestick pattern with key levels of support and resistance, which can be trend lines, it could be moving averages. So that is how you can use the bullish spinning top candlestick pattern. So common mistakes to avoid should be trading it against the general market context, or overlooking the general market context, trading the pattern in isolation. So you should always look for confirmation from subsequent candles before entering a trade. A single pattern can sometimes lead to false signals, so waiting for a confirmation candle is crucial. Additionally, consider the overall market trend and context. A spinning top in a strong downtrend may not be as reliable as one that appears in a sideways or uptrend. Like this is an uptrend, and this spinning tops that we had here was a very good one. Or if you could use it in a downtrend where we're in a trend line channel like this, you could also use it if you're in a downtrend. But you should also obey the dynamic support and resistance levels like we had here. Even though we are in a downtrend here, this was a risky one actually, but we are in a known dynamic support level, so it was kind of wise to take these trades. So, and another bad mistake you should avoid is ignoring volume analysis. Volume plays an important role in confirming the strength of bullish spinning top. So if the pattern forms with low volume or declining volume, it may indicate weak buying interest and could lead to a false breakout. So always check for above average volume when this pattern appears. So here you can see the volume increasing as we had this pattern formation, and increasing volume actually after we had that formation during the time we had it also. So another one is over trading based on patterns. You should always avoid entering multiple trades at once based on solely on candlestick patterns. So I believe with this you are set to enter the market and look for the bullish spinning top candlestick pattern and trade it. So showing you good examples for spotting the bullish spinning top candlestick pattern. Let me see if I'm gonna find one more example. And one more example. Okay, you can see this one here. This is a very big one. So we are bullish, of course we are bullish, and price hitting this trend line. Also, if you use the Fibonacci from this lows to this high, you see that we are in a key level, which is the 61.8% level on the Fibonacci, and this is a major support level. Also, we are at this trend line, so it is wise to be looking for buys from there. And even though we had low buying volumes at the time of this trade, but prior to that you can see increasing volume here. So yes, it's a little bit wise to enter. And which other confirmation we have? All the confirmation we need. The remaining is to wait for the close above the high of the bullish spinning top, which we had, and place the buy entry at the opening of the next candle, stop loss below the trend line or below the low of the bullish spinning top, and take profit at this resistance level here to give us a 1:2.98, so say 1:3 risk to reward ratio. And that is how you can use the bullish spinning top candle to trade. Remember to avoid common mistakes and always prioritize risk management in your trades. So if you found this information helpful, please like the video and subscribe to the channel for more insights. Don't forget to turn on the notification bell so you never miss an update. Apply all we've taught you, and I'll see you in the next video.